Yeah, definitely. I agree with you. I think the local transactions versus international ones probably much better placed with the international, and
Yeah.
particularly places which have weak currencies or extremely high inflation currencies. Uh, just going back, you talked a lot about the ETF flows, and and obviously that gave a lot of legitimacy because it's like obviously a large amount of legal work that's required in order to go through that, and auditing and things like that. What would you say is the current, or how do you see the current traditional wealth managers posture and sort of the allocation towards digital assets?
I think it's at the moment it's mainly just toe in the water sort of thing, and that's what it was with us. um, I think it was less than 0.01. It was a very small allocation. Um, that was for two reasons. One is that you know we don't want to go too far too fast. You can end up with regulatory issues here in Australia, and there's also the issues around the volatility of Bitcoin. You don't want a situation where you put too big a bet and then you find out that was the top, and then it falls 80% or something, or even 50%. So we were trying to manage the risk of it, and I think that's worked out reasonably well. So at the moment, it's just getting familiar with it, and I think that's a similar story globally with institutions which have taken on Bitcoin. You're now seeing more institutions. I get more research over the through my email on Bitcoin, and that's not just from Bitcoin people or from crypto people. It's from increasingly from institutions
Mm.
these days. So it's gradually heading in that direction. Um, some people might say, well, that's a negative. It's going to lose its fringe attraction,
Mm.
and that's probably tough luck, I guess. Yeah, but as something comes along as it matures, then it goes mainstream.
Yeah.
It either survives or it doesn't. I think another thing I should throw in that has caused a bit of a problem lately is that investment markets go through periods where they're obsessed with one thing then another.
Mm.
And lately, everyone's obsessed with AI, and for good reason, because AI is transformative. Um, and that's distracted a bit of interest away from crypto, which is no longer the new thing on the block, so to speak. Whereas SpaceX comes along and that gets everyone's excitement up, sort of thing. But that's just the ebb and flow of markets. That's inevitable. That sort of thing's going to happen. But it is just worth bearing in mind when people sort of think, well, why has Bitcoin gone down lately? Well, part of it is that. Part of it is related to that.
And it's really interesting. I think that you're noticing that's, I guess, that posture change and the research coming out. Again, research being a pretty strong signal, and that definitely is a 180 from the speculative sort of nature. I think where it was positioned before. In terms of like traditional investors, or just everyday investors, you talked a lot about you sort of passive broad exposure index funds and things like that, and gaining in terms of portfolios. Where would you sort of sit in terms of allocation, for an everyday investor? How would you sort of see that? Where would be your sort of posture on that?
Look, I think it depends on a bunch of things. How much wealth they've got, what their time horizon is, what their risk tolerance is, and so on. I think there is a role for it, but it would still be a relatively small part of a portfolio at this stage. Um, that said, it's just fallen 50% from its high last year, and then it might still come down the remaining amount to give us an 80% top to bottom fall, and which point everyone will say the sky's falling and bloody, bloody, bloody. But there might be a buying opportunity there, so you might want to have a higher allocation at that point if you're into timing markets. But at this stage, I would say it's still part of the alternative space
Yep.
in a portfolio. It's still going to be a fraction of what you might allocate towards shares at this stage. But I would say the optimal allocation is not zero. It's done enough to sort of prove that there is a role for it. The debate I have in my own mind
Mm.
is it back to what you said on the ABC? I think you favoured it has to be Bitcoin. It's Bitcoin sort of. Um, is it just Bitcoin, or do you have some wider crypto in there? Stable coins. Um, there is something in the blockchain,
Mm.
that will generate value in time. you talk about legal contracts, you being done on a blockchain, um, and there is value in that. So therefore, the debate is whether it's just crypto or just Bitcoin you have in there,
Mm,
or whether it's some broader exposure to other forms of crypto that might benefit from those other use values. Uh, and I haven't really resolved that one, and there's sort of this ongoing debate about which ones it should be. Do you go with
yeah.
some Ethereum or some Solana or I don't know some other stuff or some of those stable coins? Yeah, that's a difficult thing to answer, and we debated that internally a few years ago when the Bitcoin thing came along and didn't really resolve it in the end. We just decided, okay, well, it's just simpler to go with Bitcoin at this point in time, and it's better known, and ETFs out there, and so on and so forth.
It's interesting you say that, currently the two of the top five um, market cap coins are stable coins, USDC
Yeah,
and USDT. And obviously they both run on different, a whole series of different chains, so like you referenced, Ethereum, Solana, Binance chain and things like pretty much, and they are a big part of the transaction volume on that infrastructure. The thing which I think, again, you're alluding to, and I think that's a very interesting debate, is where do all these chains go? Do the transaction costs have been traditionally going down, and obviously that reduces revenues and things like that. But the number of transactions obviously is going up as
yeah.
more and more usage of stable coins, in particular globally and for everyday transactions, goes up.
Mm.
I think one of the things that could really railroad that, which we talked about last time, is central bank digital currencies, and them potentially taking that space. What is your sort of view about, where do you think a central bank digital currency will come in and take over?
I'm still unclear about that. I think they're still looking at it. Central banks are still looking at it. Um, it hasn't moved that quickly because they're unclear as to what the demand for it is. But then there is some logical argument for it. It's a simpler way of doing things than printing money. And the reality is that we're relying less and less on cash, conventional cash, and things are going digital anyway, and doing it via a digital currency is a way to do it. I think one of the sticking points seems to be that uh, if you have a central bank digital currency, then you may not. There's less need to have money sitting in the bank, and that causes problems for the conventional banks.
Yep.
But I don't quite know how we resolve that. So I'm not fully aware as to where all those things are, but I think there is eventually some of these problems will be overcome, and we'll probably end up with some sort of central bank digital currency, which will probably be underpinned by one of the blockchains out there. Well, by definition, it will be
Yep.
um, that will come from, I don't know, Ether or somewhere.
Yep.
It'll be on one of their blockchains.
Yep. Um, Shane, we're in a very sort of tumultuous time in terms of markets. Some really big highs and some also really big lows for a number of different assets. And navigating this in terms of, I guess, market cycles, it does feel like you said, AI has really taken, like a front row seat. Space investment as well seems to be a bit speculative, but still, large amounts of potential there.
Yeah.
Um, if you're, I think one of the things I think that's, the person, a young person sort of sitting here, they've potentially invested in crypto. They've maybe made some money from that. Now they're looking at it, going, okay, where am I at? A lot of different flows. What is your sort of key, number one sort of piece of advice to young Australians, or even everyone, any young person reading and watching this right now, in terms of navigating this world and building wealth?
Well, my first piece of advice is to start investing early. The earlier you start, the more you get the benefit from the magic of compound interest. um, you can see compound interest in Bitcoin, which you might have the numbers, but it's had tremendous gains from when it was incepted or first became available to people. Um, that'll slow down, of course, because it's gone from being a new thing to a more established thing. But the earlier you start, the better. I think unless you have some particular expertise and you're willing to put the time in, by doing research and listening to people and having some sort of process, you're better off taking a longer term view. in the crypto world, they call that hodl. I think that was a mistake, but they call it hold on for dear life. But buy and hold, buy and hodl. Someone wrote buy and hodl, buy and buy. And I
Hold on
like
for
that.
dear life.
Hold on for dear life. Yeah, hold on. But it's not quite that way. But history is on the side of the optimists. I've got a book around here somewhere. History is on the side of the optimists when it comes to growthy assets, and crypto is probably a bit of a growthy asset. But shares are a classic example of the growthy asset. You're better off holding on, and you do go through rough periods. You see, that's why probably that dear life thing came into it, because crypto does have rough periods which are very rough. Yeah, that 80% fall from the high in 2021 to the low in 2020. That was very rough. And so it's the same with share markets. They're not quite as extreme as that, but they do every so often. And therefore, you should realize that, yes, we've had these great gains in markets, not so much in the Aussie share market, but global shares in particular. They've had great gains. Bitcoin, AI has been a part of that recently. We've had all the stuff going on in the US with Donald Trump, which has been very entertaining when you're sitting in Australia. It may not be so entertaining if you're in the US, depending on who you are, but that's created a lot of uncertainty. Obviously the tariffs and the war in Iran are at the high end of that uncertainty, but I think it's been smoothed over by the technological revolution happening with AI. And some may have had good gains on the back of that, and you might think, well, okay, now's the time to get out. I've had these great gains, let's get out. The problem with that is that it could go on for a while longer. And therefore trying to time that is going to be really hard. Alan Greenspan, the former Fed chair, passed away Monday a week ago. And one of his famous lines was around irrational exuberance. He's sort of debating in his mind in 1996 whether there's irrational exuberance in the US share market, because the share market at the time was running pretty hot, but then it ran hot for another 4 years. And then ended up, when it fell with the tech wreck in the year 2000, just fell back to where it was in 1996. So you could have got out, missed out on a whole run up, and then probably got inclined to buy it at the top anyway. And then it eventually comes down. But the lesson from all of that is it's very hard to time these things. So I kind of think that, if you've got an overall portfolio and it's got a mix of things and a part of it has gone up really high relative to the other parts, then there may be an argument to rebalance a little bit, get back to the mix you had. But I think it's too early to sort of throw it all in and say, well, head for the hills now, because it could still go on for a lot longer. That's the way I would see it. So I think my key piece of advice would be start investing early, and try and stick in it for the long term, even though at times it might feel like holding on for dear life, because there will be volatility in there.
I think that's a great, holding through during the skepticism and when everyone's fearful, being, aggressive, and when people are being irrationally exuberant, then the potentially trading down a bit, I think is good. And I think it's very interesting. I remember, if I was to reflect back 2021, I remember at that time as well, it was probably one of the toughest times, where I was holding on for dear life, really. And so, having those conversations back then, and it's great to see and really appreciate your reflections and, digging in. I think it's a very great conversation chain, as to, this and your perspectives are very interesting as well, in terms of where we're at in the market, and also that flood of capital from potentially crypto to AI as well, being something which maybe would rebalance over time.
All these things are cyclical. It goes this way and then all the money goes back the other way. So it's the way the markets work.
So thank you so much, Shane, for joining us on Crypto Finder. And we really, really appreciate your perspective. And let's see where we're at in another 5 years as well.
Sounds good, Fred. It's been great to be here. And thanks for having me.
Thanks so much, Shane.